Qadi Sahura will be with you with the global economic and financial market outlook for the week ahead, which is going to be the week 51 or the 51st week of 2025. We're going to have 1.5 more week after this and getting close to end the year. This week is one of the most important week as it was the last week also because the last week the data what happened in the last week we will review shortly told us what Federal Reserve doing this year, but the week ahead the data that which we will have will tell us what the Federal Reserve is going to decide most probably in January, while we have other central banks meetings as well, including BOG, BOE, and ECB. Let's start and review the previous week. The previous week started with the economic data from Japan, which was very important, where we saw that while the labor market is giving us some positive data, positive signal, the GDP and economic growth is giving a mixed and negative and disappointing data. Quarter three GDP fell by 0.6% in Japan, which was the sign that maybe, increase the spread between the supporting the idea, those who supporting the idea to hold the rates, and those who supporting the idea of interest rates high for the Bank of Japan, as the Japanese yen is getting really weak, and the spread between the Japanese central bank's rates and other central banks is putting really pressure on the yen, and that can increase the inflation even further. Later from China also, we had very important data. While we saw the export increase by 5.9%, the import increased only 1.9%, showing that the global demand is getting weaker, and weakening global demand is another sign that we have to be a little bit more careful on what's going on in the global economy. As what I'm talking about, why I'm saying that about that, because it's not just about the China. We saw, for example, in the next day in German data also, we saw that the German export also, while increased only 0.1%, the import in Germany fell by 1.2%. These data generally says that the global demand is low. That's what I'm talking about, the global demand. The global demand is low, and with the lower global demand that we have to be a little bit more careful about the GDP growth for 2026. Even taught in Federal Reserve meeting that we had this week, the previous week, the central bank in the United States increased the GDP growth expectations for 2025 and 2026. Now the GDP is expected to increase by 1.7% for this year and 2.3% for next year. The labor market data from the United States also last week was amazing. We can say something like that because the GLT is showed by 7 million and more than 670,000 job opportunities, which we had in October, which means that the U.S. central bank, U.S. Labor market is still strong. Last week we had EIA short-term energy outlook, IEA monthly report, and OPEC monthly report. The one interesting thing that we saw about this energy reports is that in the previous months usually we had some spread between the gap and the spread between the OPEC and IEA expectations. But now that gap slightly gets tighter, and now they both believe that not just the IEA, the OPEC also believe that the demand for the next year can slightly ease, and that can while the demand is easing, we have more supply in the market that can put a little bit pressure or increase the pressure on the energy and especially the oil market. Later we had during the last week we had on Tuesday we had Reserve Bank of Australia's monetary policy meeting and interest rate decision, that we saw RBA hold the rates at 3.6% as it was really expected in a market. The main reason because that Australian inflation is increasing again, and that can increase the pressure on the central bank to hold the rates. There was even thought and a conversation after the meeting that with this, what's going on here in Japan, in Australia, and with increasing the inflation, there is even the chance of increasing the rates. The hiking the rates again at the 2026 if the inflation is continues to raise at the same speed. We had the central bank meeting in Canada as well, where we saw the BOC hold the rates at 2.25% as widely was expected. We say widely expected because the BOC already cut the rates by 75 basis points in last 2 months, and there is no more room for now, according to the economic condition. That's why the BOC held the rates at this level. In Turkey also, we had a central bank meeting where we saw that the Turkish central bank cut the rates by more than expected, while the market was expecting 1% rate cut from 39.5% to 38.5%. Turkish central bank cut the rates by 1.5% to 38%, and that put the pressure slightly on the Turkish lira. But however, the thing is that for a long time, Turkish central bank hold the rates at the higher level, and that put the more pressure on the Turkish economy, especially in the last months. And we had so many foreign companies that they left the Turkey. Swiss National Bank also held the rates at 0% as it was expected. The economic data and calendar condition in Switzerland also is in the situation and the condition that we can say that there is no such expectation from the Swiss National Bank to cut the rates further or even to increase it. Talking about the next week, we know that the next week it is, as mentioned, we have important central banks meetings, including European Central Bank, Bank of England, and also Bank of Japan. In Japan, it's not just about the central bank meeting. We have not just in Japan, in all these countries, in Japan, United Kingdom, and Eurozone, we have not just the central banks meetings, we have very important data. While the important economic data also will be published this week. Starting from Monday, we're going to have manufacturing outlook and index, for large industries. Generally, this week, we're going to have the PMI numbers also from most developing economies. Since they are the primary data for the December, I'm not talking about them, but just keep it in your mind that PMI numbers also should be published this week. On Monday, the house price index from the United Kingdom also will be published on Monday, where we expect to see the house price to continue falling further by almost 0.5% monthly. House price in China also, the data will be published, where we expect to see that to fall further. The previous month it fell by 2.2%. The month before that it was by 2.3%. This month we expect most probably we can see about 2.2 or 2.3% another drop in the house price, and that can confirm that the house price issues still continues in China. But we're going to have the fixed asset investment, industrial production, and retail sales also. Generally, the data which we are expecting from China, there wouldn't be such a brilliant expectations for Monday's economic data that we are expecting to see. Industrial production from Eurozone also supposed to increase by 0.1% monthly and around 1.1 or 1.2% annually. The Canadian Consumer Price Index or inflation at 2.9% annually supposed to be held at not change, and on the monthly base, Canadian inflation should increase by 0.2%, which means, that they are for now they're in the since these data are for October, we can say October and November, we can say that these numbers can be acceptable number for Canadian inflation at the current situation. Tuesdays, very important day, which we're going to start it with the PMI numbers from Australia and then Japan, but continues with much more important data, especially from United Kingdom with the labor market data, where we expect to see the average earnings to increase by 4.4%, including bonuses, and 4.5% excluding bonuses. But unemployment rate most probably will increase slightly to 4.5%. That the market was expecting between. There are two different expectations according to the different sources. 4.4 or 4.5% for labor market. This is what we're expecting to see from United Kingdom, and for unemployment rate. But Tuesday's important data will be the inflation numbers from different economies, different European economies as well. But later, we're going to have very important data from United States. We didn't have the NFP numbers as you remember in October. I mean, the October numbers we didn't have in November. So October and November numbers now we're going to have both together this week on Tuesday. Since the October numbers, they are somehow the just like expired numbers. Maybe we don't maybe market somehow slightly ignored it. But what we're expecting to see for what the market is expecting to, I mean, to watch mostly and more closely is November data, where we expect to see the unemployment rate to stay unchanged at 4.4% or slightly increase to 4.5%. But the most expectations is to remain unchanged at 4.4%. The market will closely watch this number and also the main NFP number, which I mean the jobs that they created jobs in November. The different sources they are expecting from 35 to 45,000 newly created job for November. That can be positive data that can say okay somehow the U.S. labor market again getting stronger. As you know that we had 2 weeks ago, we had initial jobless claims lower at 190,000. This week we're gonna have we're gonna check the initial jobless claims. We will talk about that. But this is important to watch this number, the unemployment rate, and also the retail sales is another important data from United States, which should be watched closely because the retail sales shows the GDP level, shows the economic power, the purchasing powers of consumer in United States. Also, it will tell us what we can expect from the economic growth. And I mean, the GDP is economic growth, most economies, the most important index. That's why the retail sales is very important, where we expect to see only just like 0.2% monthly growth annually. It's supposed to increase by 4.3%. The 0.2% monthly growth will, even if that happen, it will be big data. So what is data? Since we have too many data here, generally, I have to say that if the market generally from all the data they are publishing on Tuesday and then later on Thursday also we're going to have the inflation numbers for generally for the week, which we are expecting the inflation. I will tell it right now here. Then I will show you on the chart. The inflation is expected to increase by 0.3% for both headline and core inflation, and both of them are expected to increase to 3.2% from 3%. What I do increasing to maybe that can stay unchanged at 3% or slightly increase to 3.1%, but 3.2% less likely, but still that's the market expectations. However, looking at the market demand and the retail sales that we had, that the orders that we had, it can be possible as well. Anyway, if generally the market got that idea after these data that okay, the inflation is still strong and this is still around 3%, much higher than the central bank target, while the retail sales to 0.2%, 0.3% monthly, 4.3%, 4.4% annually is strong, and unemployment rate also at 4.4%. That can put the pressure on the central bank in the United States to hold the rates at the current situation and not to increase the rates. But if we see the data weaker than expected, and we see the less retail sales, if we see the unemployment rate at the higher levels, then we can say that inflation is slowing around 2.9% or less. Then we can expect the rate cut, another rate cut in December Fed meeting. Wednesday, we're gonna have the machinery orders and import-export data from Japan. While the Japanese central bank will hold the meeting on Friday, these numbers also can show us what is going on exactly in the Japanese economy and can make it more clear for us what we can expect from Japanese economy. Japanese central bank on Friday. Thursday, we're going to have the BOE and ECB meeting, but before that, we will have the inflation data. Inflation in United Kingdom is expected to slightly ease or stay unchanged around 3.4, 3.6% for headline and core inflation, while the PPI or producer price index also supposed to slightly ease to 3.5% from previous 3.6%. These numbers most probably will not change the idea of the rate cut, 25 basis point rate cut. Maybe I don't think that they're going to change the idea, because markets already priced in the 25 basis point rate cut, and that's what's going to happen most probably. There's more than 80% chance for that. Retail sales price also, or retail sales inflation also supposed to stay unchanged around 4.3%. European inflation also supposed to stay unchanged around 2.2 and 2.3% for headline and core measure. Generally, not surprised from there. And then on Thursday, again, another important day, which will start with especially for those who start with the Japanese data, especially who trades Japanese yen and the Japanese stock market. Always, try to follow these numbers every week: the foreign bond investments and the foreign investment in the Japanese stocks. Increasing the foreign investment in the Japanese bonds or the selling more, that means that we can count on a rate hike and put the pressure on Japanese stock market. And usually these numbers are against each other. So don't forget to watch this. We generally expect to see higher, more investment in the bonds and less investment in Japanese stock market, as the market is already counting on rate hike. BOE will hold its monetary policy meeting and interest rate decision later on Thursday, where we expect to see 25 basis point rate cut for to 3.75% from 4%. The thing is not that will the Bank of England cut the rates or not. Yes, they will cut the rates, but the thing is that about the number of the voters. Market expecting 5 votes for rate cut and 4 votes for holding the current rate. I do expect 6 votes for rate cut and 3 votes for holding the rate, which means more dovish stance I do expect, and this dovish stance will put more pressure on British pound. In Europe also, we can expect the European Central Bank to hold the rate around 2%. No change there. We don't expect any changes around from in the European interest rate, European Central Bank interest rate, as the economies they think. One of the things that the central bank in Europe is looking at more closely before making any decision is the progress between the peace talks progress between Russian and Ukrainian. If the Russian and Ukrainian war continues, then the central bank in Europe will have more reason to cut the rate to support the economy. But if the war somehow ends and we can get some positive signal from that area, then maybe the central bank in Europe will not need to cut the rates, and the market by itself will get some more reason to say, okay, now the economy is getting better and we can invest more in Eurozone, and especially in the countries like Ukraine and around. So that's why the central bank decision will be depend so much, not so much, but will be depend on the peace talks there as well. Inflation numbers in the United States also will be published, will be out on Thursday. We talked already about that. Initial jobless claims also expected to slightly ease to 230,000 from previous 236,000 in the United States. The week before that, it was 190,000. But generally, the market showing that the labor market is fine. Friday, we got out the inflation numbers from Japan before the central bank meeting, just like 3 hours before the meeting. We are expecting to see that the national consumer price index to stay unchanged at 3% and core inflation at 3 point. Also, the core inflation also supposed to be at 3%. And inflation excluding food and energy together on the annually supposed to sit around 3%, 3.1%, just like but we don't expect any surprise there. That's why I do think that the central bank in Japan, or BOJ, will need 25 basis point rate hike. The market really is confused now because there is really the different ideas about the rate hike and the rate holding the current rate. That's why there is a little bit hard to guess what will happen. I do personally expect 25 basis point rate hike, which can support the Japanese yen and increase the Japanese yen at the end of the week. and put more pressure in the Japanese stock market. Retail sales numbers also will be out from the United Kingdom, where we expect to see slightly better economic growth. The retail sales will be 1.6%, but that will be after ECB BOE meeting and wouldn't change the market. New home sales in Canada supposed to stay unchanged after 0.4% drop previous month. After 0.7% drop in the previous month, but the home prices also that's also supposed to be flat after 0.4% previous month falling. Both price and sales will be flat, while both of them they were negative previous months. That can be slightly better sign in Canada from the Canadian economy. Existing home sales in the United States also supposed to increase by 1.2% monthly and around 4 million units. And that's the most important data from the economic calendar that we can expect for the week ahead. But let's go to the chart and see with these data what we can expect from the charts and how the chart is going to move. The VIX or market risk after Friday. On Friday we had first VIX to falling around under 16, and then we had in a few hours we saw that again around 18 at 17.80, but market closed with the risk around 16.53. For the week ahead, according to the important economic data which we have, we will see probably more volatility in the market that can increase the market risk again, and that's why we expect to see the VIX again increasing between 16 and 17, but not too much higher. With this risk in the market, dollar index most probably can increase, especially with the positive data which we are expecting to see in the labor market mostly, and stickily somehow inflation. Most probably the dollar index, which fell under 97, under 98 previous days, we expect to see again the dollar index between 98 and 99, especially with the higher increasing the risk. So the dollar index between 98 and 99 will be around this area. While according to these data and this expectation, we can say that the gold price can hold its gains at least above 4,250. The thing is that if the central bank, we count on a dovish stance and they cut the rates, weaker dollar will increase the gold price. This is what I told last week as well. If the central bank will have a hawkish stance, which means that they will hold the current rate again, put the pressure on the stock market again, demand for the safe haven, and it can support the gold. Generally, the gold is positive right now, even if we have some correction, that can be the buy opportunities. In the energy market, after expectations and the reports that we had from IEA, EIA, and OPEC reports that last week, we can expect more pressure on the energy and oil market, as now all of them almost we can say that they are expecting more output compared with the lower demand, especially with the ongoing green energies that we have, increasing the green energies demand and production across the world. At the stock markets, with these data, we can say S&P 500, Dow Jones, and Nasdaq even thought. If you watch the video that we had after the Federal Reserve meeting, we talked about that. Now with this data, we can expect pressure on the stock markets, because even thought the central bank, they cut the rates, but the tone and the tone of a little bit hawkish tone of the conversations, speeches that we had after the meeting, and also the differences between the ideas that we have, these disagreements that we have. Disagreements that we have among the central bank policymakers, that all of them that can be somehow will be read, that can be read as a hawkish tone and put pressure on stock markets. And that's the same for not just the S&P 500, for the Nasdaq and the Dow Jones also, we can expect same reactions. So generally, we are not positive about the stock markets. Not just in the United States, the same thing we can expect from the UK and other stock markets as well. In the Nasdaq and the Dow Jones also, generally, we are expecting more pressure on the main indices. This is the same for the Nasdaq, also same for the Dow Jones. And as for the cryptocurrencies, the Bitcoin price still is under pressure. These in recent months, what we saw from the Bitcoin price movements, that Bitcoin is now getting more showing more reaction to the economic data, and we can see now it's more logically moving more logically. And with this economic data, with this overall condition that we have in the market, we don't have anything to say that okay, because of this data, we can see price increase in the cryptocurrency market, or that can increase the prices. For now, still the pressure on the Bitcoin price can continue, and we expect to see the BTC still under pressure, especially as long as it's under 92,000. Any recovery above 94,000 or 92,000 can change the market condition, but trend will change above 97,700, only above this area. That was what happened previous week and what we're expecting for the week ahead. Hope it was useful for you. Talk to you again next week. Have a good time. Bye-bye.